Adrian Lim, Senior Investment Manager at Aberdeen Asset Management as well, joins in on the show. Adrian, hi. Morning. October has seen emerging markets outperforming the DAMs. Do you expect that trend to continue till the year end?
Oh, that's very difficult to say. I mean, it's 1 month. And if you look at the year to date, it has hardly been a calendar year where you can look at a month and project that. We've seen flip-flops in not just emerging markets, but almost in every single asset class that you choose to look at. It's very difficult to project on 30 days trends. The emerging markets fundamentals remain strong and attractive, but whether this is a beginning of a trend, that's very difficult to call.
Adrian, so do you expect investors to be positive on emerging markets despite internal issues they are struggling with, and do you think fund flows are likely to remain strong into emerging markets?
Well, I think globally, almost every region, almost every basket of investment asset class struggles with something or the other. I think the challenges in emerging markets are not new. High levels of inflation, currency volatility, some fiscal indiscipline, these are not new issues. And I think that given the strength in foreign reserves as well as the demographic advantage of some of these countries, the emerging markets are better placed to recover from these challenges than their counterparts in developed markets. So I am positive on most emerging markets cases.
But Adrian, for countries like India, would it be more domestic factors or global that are likely to set the course for the market movement? Is the worst, according to you, over for India?
Well, it's this year has been a mix of both. And I think it's always an interplay of both issues. When you do get a steady, calm global investment climate, then the global investors tend to focus on country-specific issues. But when you have the seismic moves in policy, in the tone of quantitative easing or tapering, you will always get these global issues overwhelming the local market issues. I think for India's case, given the severity of some of the local challenges and how much that's been played up in the media, both the local and foreign news will continue to play a big part in the tone that investors have towards the country.
Adrian, so what do you make of earnings so far? Because numbers surely have surprised everyone.
Well, it's been a mixed basket so far. We've seen some resilience among the consumer goods companies. We've seen some resilience among the software engineering companies as well. Not all the banking results have come out, but we've seen signs of balance sheet stress. But we've also seen quite encouraging levels of loan growth despite the systemic slowdown. So it's been a mixed bag. Our portfolio of companies are comfortable within the Indian context, but it's been a mixed bag, and it's difficult to see whether the GDP growth has much less to fall, or we're basically expecting a recovery from here on in. It's very difficult to tell whether it's the end of contraction in India just yet.
You've also got stake in TCS recently, Adrian. Valuations beginning to look stretched according to you. What's the view on earnings from IT majors like Infy, HCL Technologies? Because they all seem to have surprised on the profitability front.
I think the capital markets overplays the volatility or the perceived volatility in IT stocks. All of the companies in the IT space, at least among the majors, have been very profitable. There have been some margin pressures, but largely they have been very resilient, very profitable with strong balance sheets. And these companies compete in a very competitive landscape with global peers for global customer wallets as well. And we think the quality of this sector is very high. TCS, we've taken some profit, but these are relatively small portions cutting back. If you look at our positions at the end of the month, you would see that our funds would still have quite a very substantial chunk in TCS, and TCS remains a core holding for us. I wouldn't read too much. I think there's a danger of reading too much into us taking some profit from TCS.
Adrian, what about financials? Is the risk-reward ratio now slightly more favorable? Is it time maybe to revisit PSU stocks or PSU banks? And in general, what are your preferred picks in the financial sector?
Well, I think there is some stress in the banking and the finance sector. That's undeniable. We've seen quite a lot of restructured assets, and we've seen quite a lot of creative ways to avoid booking restructured assets or NPLs. And I think that this is a trend that we are not comfortable with, and we recognize some of the segments that are under duress. Having said that, we do pick we don't make a distinction between private sector banks and public sector banks. We pick the best banks we can find. And we have gone with HDFC Bank, ICICI Bank, and we like these companies. They do a very good job, not just focused on risk controls, but on developing strong franchises that are known for quality over the medium term. That has been unchallenged from our point of view. And we will continue to hold these banks for some time. But it's undeniable that there is some credit stress in the banking system.
So do you expect the RBI to continue to be hawkish in the upcoming credit policy as well, Adrian?
It has a tricky balance to make. I think they want fiscal discipline in the banking segment, if that's what you're talking about. But in terms of inflation and growth, I think RBI stance of managing inflation and yet with a long-term view for sustained steady growth remains unchanged. Over the short term, the emphasis will be tweaked with as all RBI teams and RBI chairs do, and that's difficult to call. But over the medium and long term, those objectives, we are convinced, remain intact.
Adrian, most experts also believe that India will push reforms back burner as soon the government will be in the election mode.
I think it's natural. It's not just India. Everybody pushes difficult reforms back when you have an election to win. We would expect more populist measures. We would expect some suspension of progress or development of reforms. I don't think that's new. I think it's just par for course.
What about consumer stocks then, Adrian? Do they offer favorable risk reward? What are your views on ITC, Unilever, Godrej Consumer and Nestle, etc.?
Well, we hold all of those stocks. We like the positions within the Indian market. They do currently service the medium tier and upper tier of households and families in India at this point in time. The attraction for us is that over the next 5, 10, 15 years, their market penetration will go deeper as India gets richer and has more spending power. And we are convinced that they're run by strong management teams. Risk reward is very difficult to call. A lot of the share prices have been steady and resilient, and that's a call that I'm sure your viewers would have very strong views about one way or the other.
Indian auto sector continues to suffer from slow demand. Do you continue to prefer two-wheelers over four-wheelers? And what is your view on Hero MotoCorp now?
I think the two-wheelers have got more traction. I think four-wheelers have got a lot of competition, but it's coming off a low base, so the growth trajectories can be stronger over the short, medium term. Having said that, it's a very competitive landscape, not just in four-wheelers but two-wheelers as well. We are big investors in Hero Motorcorp, and I think they've done a very cautious, steady job, a very savvy job of managing their transition from being partners with Honda to being independent. And you know, it takes time to build a product portfolio, it takes time to build an independent brand, and it takes money and resource as well. And from what we've seen since the separation, the company has been very cautious about putting money to work, has been very careful, and that's not a bad thing. We feel that they have in effect focused on the right things, and 1.5 to 2 years is too short a time to judge on whether they will make that transition effectively or not. But all the signs show good promise.
So what about industrials? Is it time to take a look at them?
It's always a time to take a look at any sector. You know, from our perspective, we pick stock. We don't pick sectors. It doesn't mean that we look at things that are in fashion or out of fashion. We look at a whole cross-section of companies at any point in time in cycles. So now's a time to look at opportunities in industrials as it was 12 months back.
Adrian, always a pleasure to have you back on ET Now, and thank you for joining us.